If you take a look at the overall S&P 500 and you filter out the two worst performing stocks, something is very clear. They have something in common. They are both big retailers. Macy's and Kohl's are the worst performing stocks. Now it's early, but so far this year in the S&P 500. Could this possibly make them a bargain? Or are they going to fall more? Welcome to Trading Nation. I'm Brian Sullivan. Dennis Davitt and Jonathan Krinsky are your team. And Dennis, I know you're not an individual stock analyst. You look at sort of volatility, the options market, macro markets. Are you seeing anybody get bullish on even on the options side around these two retailers that had extremely disappointing news recently that sent their stocks tanking?
No, I don't see any options activity. If anything, I see people buying more puts to protect the downside in these stocks. I mean, the best retailer to buy is Amazon, from everything that I can gather. Picking between these two stocks, if I had to pick, I would say Kohl's over Macy's. Macy's is like a mall within the mall, so they don't really stand out product-wise to anything. Kohl's is a lower price point, so we're seeing more activity in Macy's to the downside. People buying protection. That's what the options market tells me.
So do you think that's more negative sentiment or simply hedging people that may still be stuck with the stock?
From an options point of view, it's more negative sentiment, because when people come in and when a stock really sells off, you tend not to see people come in and buy puts against it on the low. At that point, the loss has been realized. Oftentimes, put buying in stocks when they're on the low is because people continue to see further downside in it. And also, sometimes the stocks can be hard to borrow. To establish a short position, you go in and buy puts against the stock, and you don't have to deal with the being bought in. And you also limit your risk if there is a dead cat bounce on these stocks.
Okay, well, let's find out if we're going to get that. Jonathan Krinsky, I mean, I guess you look at the chart and both of them go, you know, that's the universal sound for a big steep drop. Do you see any bounce coming for either of these names?
Well, I think first we have to recognize that these are consumer discretionary stocks, and the consumer discretionary sector is still the best performing sector from the 2009 lows, even after the recent underperformance. Now, a lot of that is from Amazon, but even on an equal weight basis, it's still one of the best performing sectors. So the recent weakness that we've seen in a lot of these traditional brick and mortar retail stocks, while it's been extreme, when you think about where they came from in 2009, that tells you that maybe there's still a bit more damage to go. And you said, if we look at these charts of both Kohl's and Macy's, they've had big moves to the downside. They're at what could be potential support, but the trend is just so bad. The relative strength versus the market and even the discretionary sector is very poor. So our advice would be, if you do get any type of bounce, you want to use that to sell into as opposed to trying to pick the bottom here.
Oh, wow. Charts look bad. The options market looks negative. Not a lot going well for Macy's or Kohl's right now. Jonathan and Dennis, thank you very much. Anybody out there maybe thinking they're bottom feeding, listen to these two guys. Thank you. All right, thank you folks for watching Trading Nation. I'm Brian Sullivan. We'll check you out on CNBC as well. Have a great day.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.